Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. Today, a new guest, and I've been trying to get this guy on. I'm really excited about him. He's John Browne of Euro-Pacific Capital. John, welcome to USA Watchdog.
Hello, Greg. Thank you very much for having me on.
Now, when you're on mainstream media, you are a senior economic advisor for Euro-Pacific Capital, but people don't realize that you have a very deep career. You were an advisor to Margaret Thatcher. You first identified Gorbachev as, hey, you know what, Maggie, this guy, well, he probably didn't say Maggie, but, this Gorbachev guy, we can work with him. You have a very distinguished career. You are also a member of the Parliament in the UK, and so I am really happy to have you on today. Thank you, sir, for joining us.
Well, as I said, Greg, it's a great pleasure to be with you.
Well, I wanted to talk to you about what happened last week in the gold markets. We're up one day, $20, down one day, $20. Here it is Monday, the beginning of a new week. And what's your read on this gyrations of the gold market up and down here?
Well, there are several types of investor in gold. I mean, first of all, most buyers buy it for jewelry. It's the biggest part of gold buying in the world. But the investors buy for two reasons. One is a hedge against inflation, and the other is insurance against catastrophe. And a lot of people got into gold as a hedge against inflation because they thought that QE was going to spew money into the system and there would be rapid inflation. But most of the money that's come from QE through government bonds and the government spending and things like that has ended up with people and companies, and they're so uncertain, so fearsome, that rather than spend it, they've hoarded it in cash in the banks. Massive cash balances approaching 4 trillion of cash sitting in the banks. And so there it is part of the monetary base. It is not until the banks lend that money out, particularly on a fractional leveraged basis, that it becomes part of the money supply and therefore highly inflationary. But because people are so uncertain and so fearsome, they're not going to the bank for lending, for loans. They're just hoarding cash. And so the inflation isn't showing. It's latent, but it isn't showing. And so some people say, well, therefore I should sell gold, and this stock market seems to be going up on thin air. There's no real reason, but it's just shooting up. So why don't I sell my gold and then get in the stock market and take a flyer on that? And then you've got the manipulators of the gold market, and the biggest are the central banks. And they want to get gold out of the system, and one of the best ways of getting gold out of the system is to make it volatile, so it loses its credibility as a store of value. And so they used to do a pooled effort of 500 tonnes a year through the IMF. And the IMF, when prices were rising, would be buying, and when they were selling, they would sell huge amounts of gold. A net selling of 500 tons a year to keep the price down and volatile. And the rumor has it in the market that 2 weeks ago there was a massive short sale, a naked short sale, in the area of 126 tons to 400 tons. A massive sale. And it was all of a sudden, and if the strict COMEX limits had been observed, that would have taken something like 1,400 dealers all to act together to create that sort of a short sale all at the same time. So it sniffed a little of collusion, and who could get away with a short sale at least 126 tons without there being an investigation, a naked short, and all this collusion? The only people would be the Fed. And so the feeling is that the Fed is trying to drive the price of gold down in a major way at the moment by putting naked shorts in the market.
But hasn't that kind of been a pie in the face for the Fed? I mean, here they're trying to run people out of gold. And then you see this, James Turk, for example, over at Gold Money says, it's huge amounts of gold being bought, a huge amounts of gold going out of the LBMA and COMEX. The drawdown is something like, 30% of the COMEX was lost in the last few months in their physical gold.
Yes,
so,
you've got extraordinary differential and in a way, two different prices for gold. There's the paper price and the real price for the metal. Because the people who are in it short term, the major hedge funds, and they said they wanted short term trading gold. They weren't going to hold it for a long time. They weren't investors, they were traders. So they tended to buy the ETF, what I call paper gold, like GLD and all that sort of thing. Investors were more, especially retail investors, were more going for coins and actual metal. And so where the paper sellers were selling, the speculators wanting to get out of gold and into the market, they sold. The ETF price was plummeting far faster than the gold price. And in fact, the price of coins and things was rising. So you've got this differential in price between the metal price and the paper price. And you mentioned China. China has now taken over from South Africa as the largest producer in the world, doesn't sell a single ounce of its gold, takes it all into its own treasury. It buys gold in the international markets, and it also buys shares in gold companies. So China is a major hoarder. India is a major taker of gold. And most of the surplus countries, including Russia, are great believers in gold. And so you have the people who are surplus or resource-rich buying gold, and those who are massive debtors, like the United States, the largest debtor in the world, like Great Britain, like the European Central Bank or the European Union, all people in massive debts trying to demolish gold, get rid of gold. But secretly, they still hoard it. You see, a lot of these debts in Europe could have been paid off if the central banks had sold their gold, but they don't want to sell their gold. But they don't want to be seen as aggressive buyers either. So they're sort of playing cool and not selling gold but not buying, whereas the resource-rich and surplus nations are buying it. And as you rightly say, there's demand for gold. And of course, you can see it also in the retail level, in the delay in the delivery of coins. When you buy a coin, you don't just get it tomorrow or the next day. Sometimes it's up to 6 weeks late before you get the actual coin, because the mints are short of the metal, both in gold and silver.
So I want to take a little change here, a little turn, because I know you know a lot about Russia. And right now we have a little problem that I think is really getting overlooked and undersold in the world, and it could affect the price of gold, and that's Syria. And the Russians have a naval base in Tartus, and I've been saying this for a year and a half. They are not going to walk out of Syria and say, oh, come right on in, let al-Qaeda take over. Are we looking like we're going to have some sort of conflict that involves Syria and Russia and Israel? Russia now is supposedly has sold or is selling these high-tech missiles, these S-300 missiles that can knock down Israeli jets. And, John McCain's over in Syria, and he's talking to the Free Syrian Army, which is al-Qaeda, and Hezbollah is throwing their support behind Assad on the other side. It's a pretty sticky wicket, and I know you're an expert on Russia. Is Russia just going to knuckle under and let Syria fall like Libya?
I don't think so myself. Syria is a very, very difficult and complex situation for America, but partly because America and Britain's activities in the Middle East. We've gone into 2 wars in the Middle East, which I think were fruitless and highly expensive. The second Gulf War and the war in Afghanistan, which wasn't an in and out one, we stayed there for ages, and have built up tremendous anti-feeling in the Arab world, and therefore lost a lot of our clout. And so we've now got Syria, where Russia has the clout. We have very little, and there are all sorts of players, and from different angles. There are extremely tough al-Qaeda people, there are less tough terrorists, and there are then outside nations in the Middle East, like Saudi Arabia and Qatar, that are playing in there as well for their own reasons. And it's a very complex situation, but the sad thing is that both the United States and the United Kingdom have lost a lot of their influence and clout, and therefore makes it much more difficult for us. And we have a close ally in Israel there that is extremely vulnerable. And Israel cannot allow these sophisticated missiles to be within striking range of Israeli airfields and their own aircraft. They're very dangerous missiles and very accurate. And Israel simply can't allow that. So the situation is worsening by the day. And Russia sees a marvelous opportunity to hold firm. It's always been very reliable to Syria and the Assad regime, and I think it's going to stay there, and seeing this as a weakness in the Anglo-American side, and that Russia will gain.
Could this spiral into a big a wider regional war.
Yes, I mean, all wars, just like the First World War, I mean, over the death of a single individual. I mean, things spiral. Wars have an awful habit of changing, starting maybe contained, and then becoming spiraling out of control because they tread on the interests of major powers, and major powers have major interests all around the world. And so things are very dangerous.
I think we're at an inflection point because the Israelis have said, if you get those missiles, we're going to attack again. They just knocked out these Fatah 110s with 180-mile range that Iran was sending in, and I was surprised they haven't hit back, and maybe they haven't hit back yet. And I'm not on either side here. I'm just saying, I'm looking at the situation going, how long can this go on before Israel gets bombed and then they retaliate? They can't take a big hit. They're a small country. They cannot take a big hit. And, Assad is saying, you attack us again, we're going to attack you. So, and Israel said, well, if you get those missiles, we're going to attack you. It just looks to me like if this gets spiraled out of control, the world economy could implode, and I think gold would take a moonshot. What say you?
Oh, well, I mean, it would certainly be a major boost to gold, but just to Syria one moment, I remember when you go to officer training schools like Sandhurst or West Point, the sergeant major says sir to you, and he says, I call you sir, and you call me sir, but only one of us means it. And Syria says that it'll retaliate, but it doesn't. And the one who definitely will retaliate will be Israel. And because they have a vital interest, and they cannot allow that vital interest to be trodden on. And of course, a commotion in the Middle East like this, which involves outside major powers, would be very bad for world security, and of course would have a major impact on the price of oil, and therefore on gold. Gold is an insurance against catastrophe, and a major blow-up in the Middle East would tend towards catastrophe, because you have now nuclear powers involved, and then the super nuclear powers involved on the outside. Very similar, when you think of it, to the First World War. They were little tiny nations like Serbia and places like people were sort of trying to play with them and organize them, and suddenly they got major countries involved which had empires, and suddenly the whole world was involved.
And I want to bring that. I'm glad you brought that up, because we're going to close with the hidden account of the Romanovs. That's a new book that's just come out by you, and it's about what you're talking about, World War I, and how World War I, which is amazing. History doesn't repeat itself, but it rhymes, and this sure looks like it's rhyming in another part of the world. The hidden account of the Romanovs, and it's already out. And tell me a little bit more about the book and how it relates to the Middle East right now.
Well, as you know, the book, it's a fictional historical novel, but in 2003, President Putin paid a state visit to Britain, the first one since the emperor in 1909, and the British were sort of cozying up to the Russians, and they ordered that all imperial accounts were to be closed and the money given to Russia. But one of the people, a trustee in the Bank of England, says, no, this money came from England and from Hesse, from the Tsarina, and therefore resist it, and has an investigation which follows the career of a Grenadier Guards officer through the First World War, from the Mons, the retreat to Mons, to the Somme, and on to Gauche Wood, with actions involving the Prince of Wales, who was in the Grenadier Guards, and Winston Churchill, who was in the Grenadier Guards, and in their trenches at that time, and actions, combat flying with the Royal Flying Corps. And then the story switches into Russia, when the King of England, King George V, had tremendous pressures on him to delay his rescue attempts for his cousin, Emperor Nicholas II. But then he does get the rescues going, and one of the people told to go into Russia and look for Romanovs and rescue them is this Grenadier officer. And the whole story spreads into Russia, and you have the imprisonment and murder of the royal family. You have the MI6 led assassination of Rasputin, and then the Russian Civil War, and so on. And so that's really the book, what it's about, and has a number of flashbacks to modern times. And it can be got it's on Amazon, on Barnes & Noble, iUniverse, and my own website, which is hiddenaccountoftheromanovs.com. And the book can be got in either hard copy, soft copy, or e-copy.
I hope they turn it into a movie because it just sounds very, very interesting. Any prediction as we close here on the price? We hit a bottom. A lot of people think, hey, they got to let off the gold. They are vacuuming out the warehouses at COMEX, at LBMA. People are stampeding into gold again. I mean, we've had these gyration of $20 up and down. Are they going to let off gold? Are we near an inflection point? I mean, even George Soros, who cashed out of GLD, and that was, George Soros is selling gold. Well, he cashed out of GLD, but he got paid in gold. He got actual gold out of GLD.
Yes, because this is one of the things about GLD that investors should understand. Small investors can't get out in gold. It takes a large investor you've got to have over 100,000. To get gold as a repayment from GLD.
So it looks to me like we're putting in a bottom if George Soros has taken physical possession.
Well, I think people were pretty shrewd. When the recession started, people turned to cash, which is just where they should have been, to hoard as real assets like real estate and things fell. And some people have now got more worried with the central bank seemingly out of control on a race to the bottom of currencies. You've got the US dollar with the Fed's QE, now another reserve currency pretty much, the yen. They're doing almost 3 times on a relative basis what the Fed is doing. The ECB, of the European Central Bank, doing the same. The Bank of England doing the same. The 4 most influential central banks in the world are hooked on QE. And I, wonder how they'll ever get out of it, because when they even talk vaguely that they may just taper off, the stock market takes a dive. And so people are worried. And so they go not just for cash, and I think very sensibly for real cash, which is precious metals. And I think, the Soros case is an example. He was in there as a hedge fund trading the paper gold. Now he's going for real gold, and he converted his GLD because he was a big investor. He was allowed to convert into gold, and I think he was right. And I think it's coming. I don't know that this is the bottom, but it's in this area. I think gold could go down to 1,200, which is some of the lifting costs of gold. Don't think it can go much below that. For long, because the costs of getting it have risen so much. And I think this is very near a bottom for gold before it will resume its sort of cyclical upturn, and it will trace the irresponsibility, in my view, of the central banks just printing cash from nowhere.
John Browne, senior economist, Euro Pacific Capital, thank you very much for joining us today on USAWatchdog.com.
Thank you, Greg. Thank you very much.